We did briefly mention that University of Michigan figure, but overall, if you look at inflation, yes, it's here. How transitory will it be?
Well, I think if you really dissect the inflation data, then we can see that there's a clear reopening impact, stripping out the sectors that have experienced higher price rises because of reopening. Then we get to a much more normal inflation rate, so core inflation around about 2.5%. Still perhaps a little bit above target, but certainly nowhere near the levels that would cause a real concern for the Fed. So the base effects we are seeing dropping out of the annual numbers. For the monthly numbers, we would expect to see those numbers starting to come down, as indeed we did with the most recent reading. Producer price inflation, I think, does give us pause for a little bit of caution, because it's clear that imported inflation is still high. Commodity prices, the supply disruptions that we discussed earlier, those are still having an impact on imported costs. So that I think is reflected very much in the University of Michigan confidence reading. Worries about Delta, worries about the impact of inflation on real incomes.
Sarah, when you look at the biggest policy mistake from the Fed, I mean, is it that actually they don't see this inflation? You know, for a moment, there's a belief that inflation is transitory and the bond market believes it. Is it a bigger risk that actually they get that wrong, or is the bigger risk that they taper too soon?
I mean, there's a huge caution in tapering too soon amongst this Fed. So I think that there is certainly a more dovish approach, which would suggest that they would stay cautious unless or until the activity data is stronger, and particularly, as Kashkari was saying, until there's confirmation of a strong rise in jobs. We've had a couple of very good months, so let's see what happens with the August data. On the getting inflation wrong front, the problem is that we won't really get confirmation of that until later in the year. If inflation is becoming a problem, we'll start to see it becoming embedded in earnings growth. And so with the earnings data so volatile at the moment, it's very difficult to properly read what the trend is there.
Sarah, what about the trend in Europe? When you look at European CPI, first of all, I mean, I was looking at Italian bonds. It's amazing that Commerzbank expects the spread between Italian bonds and German bonds to actually narrow to 75 basis points. Is there too much faith in what the ECB can actually do at this point?
And I think for Italy, actually, it's been a very encouraging story. Draghi is pressing ahead with reforms. Markets clearly have a lot of confidence in his management of the economy. The COVID situation, which was very poor last year, has been better controlled this year, and of course vaccinations are doing very well there. Now, the inflation story, again, is somewhat different to the US. We see headline inflation moving above target, but core inflation staying very well controlled, too well controlled, I think, from the ECB's point of view. It doesn't look likely that they're going to be removing policy accommodation anytime soon. We're expecting that they will extend QE, maybe not in the form of PEP next year, but under the sort of asset purchase program, generally moving QE purchases well into, say, the third quarter of next year, rather than coming to an end in March of next year.
Sarah, what about the UK? So I haven't asked you, I mean, we've been talking for about 15 minutes. I haven't even asked you about the UK. Is this maybe the trickiest for the Bank of England to actually see what they can do?
I think it's very tricky, because if we start with COVID, we've seen a big surge with the Delta variant, a big collapse in cases picking up again now. Hospitalizations remain very low. We've got a good vaccination rate here, but as we see from countries like Israel, that may not count for a huge amount. So there are big uncertainties over reopening of the economy, restrictions lifted in July. schools going back, many offices really properly going back to work in September, what will that mean for the pandemic, and what will it mean for the capacity of the health service to cope? At the same time, we have seen some quite worrying inflation trends in the UK, much more so than in the euro area. And again, it's a matter of, what's happening to wages. In some sectors of the economy, wage growth is picking up very rapidly. We do expect that the Bank of England will move ahead of the Fed, and certainly well ahead of the ECB, raising rates in the fourth quarter of next year. The question is, would they need to act sooner?